Epstein, and here we are with your weekend edition of your Metal Report. And this is for Friday. And we're at April 11th, 2025. And you know what we look at in this edition are weekly charts to get a better idea of what to do. Now, I can frankly tell you, trading off weekly charts in the futures because of heavy margin, 90% leverage, that's what I mean. It's not as easy, in my opinion, as spiders, ETFs, and stocks, but it's a must. You got to look at it and see where you're at. So, what about news? There is no major news due out Monday morning from the government. We have earnings going. The bank earnings took off today. Now we'll start getting the regular corporate earnings along the way. Every single day there's something new on tariffs. I'm sure you're aware of it. And going to that, let's take a look at the two reports that did come out today, because you have a yin and a yang. The yin was producer prices. Inflation's falling. The Trump administration is doing a victory lap. For the month of March, it's a huge win, down 0.4. March was expected to be up. The PPI, ex-food and energy, down 0.1. They expected it up 0.3. Consumption down 0.5, so the consumer pulling back. That was the warning sign. I'll show you something. And February price, up 0.1. They revised it, not enough to worry about. Here's the yang, and it's bad. This is backward looking. You're looking at what took place. This is April going forward. It's consumer sentiment. The consumer is not happy. If you take a look, 50.8. In March, it was 57. If you look at current conditions, 56.5. It was 63.8 in March. And if you look at the expectations, it's 47.2. That's under the 50 level. That's not a pretty number, by the way. And you are going here versus the 52.6. Then when you look at their inflation ideas, 1 year out, 6.1%. You heard what I said, 6.1. We were in the neighborhood of, 3.5? They're looking for a big increase. That's not good. What if I tell you longer term, 6.7? Growth in the U.S., they think it's going to come down, GDP 1%, if we can get to that. So this trade war is having a negative impact, and we're seeing it in the day-to-day action in the market with one exception, gold. Gold has been on a tear to the upside, and I'm now nervous. I scan during the day different TV stations. If you saw my office, I have quite a few screens here. And to a person, every analyst, I'm bullish. You got to buy it right here. They're paying absolutely no attention to charts. They're paying attention in their mind to the inflation that is here and going to keep coming. And to a person, none of the analysts that ask them, the host, I should say, none of the hosts ask them, if you buy it at 32.44, where would you come out if it starts going against you? Well, if you're paying cash for it and you're just putting it away, I get that. But if you're using the futures at 90% leverage, I don't get that at all. If you've never run yourself a futures brokerage account, you got a problem, because what if you drop down $100 an ounce? You have any idea the pain that is in this market? So I don't know what you know or don't know. I can only tell you that that is stupidity in some ways. Somebody should ask them, the stupidity being the hosts. Ask them where they're wrong. That's what I want these people to ask. Hey, John, I see you're buying XYZ. That's great. The market's down. Yeah, I think it's good long term. Is there a pain point? And every now and then they go, weren't you buying that 3 weeks ago and you just got out? How could you do it? And there's always an argument that shows up. Saw that today in somebody in their portfolio with one of the hosts on CNBC, because he had just gotten into the Russell Index. In all fairness, he explained it was 4% of his portfolio, what he did, and I credit him. He came back. But nobody's right all the time. In fact, you're wrong more than you're right. Nobody can pinpoint the exact moment of the turn. You're trying to catch the swings with the market. When you look at gold on a monthly basis, you're up 3%. So on a monthly basis, it hasn't run. 3% is okay. It's nice. It's not out of control. When you look at the weekly, a little juicier, 6.98% if the market's finished up right here. Remember, we're only at the 11th. We're about a third of the way through the month. Up through here, look at this outside week up. Mark on your chart, this low should not be taken out in the next 2 weeks. If it is, I want your horns to go up and go, something seriously wrong. That from here is far. It's 29.50 roughly, 29.49.70. If that's taken out, I say there's something seriously wrong, that this run has had its day. That doesn't mean I'm bearish. It means that that's what I'm thinking. You're up and over. The under is the 18-week average. All the other main averages are under the market. That's the 100 in green. The Bollinger Band, you're over it. That took me, in my trade analysis, out of the market this week. And the reason is I think it'll pull back. And you'll say it can keep going, and I go, it's a low percentage trade. It certainly ran like that here. It didn't here. It runs back in, and if you want back in, gives you those little breaks. It ran like it there. Could it keep running? C'est la vie. Then it keeps running. At this price, I realize how, in futures, how much you could give back on that. If it were GLD, I'd have a bit of a different opinion. I do look at the two a bit differently, because 50% leverage, even though it's based on gold futures, versus 90% leverage, and cash only at times too. Higher lows, higher highs, embedded reading. So you keep watching the embedded reading. If this closes under 79, I say it's clear the deck time for short term. In the gold-silver ratio, I wanted to show you, this market has been up in the past all the way into the 120.22 level. You're trading right now at 198. If gold wants to keep advancing on silver, it's been there, it's done it. It can go 20% more. So when I see people that were saying buy silver, and I saw that all last month, it's going to catch gold. Does that look like it caught gold? That if you're bullish on a commodity, buy that commodity. I was a sucker in my early career, and I'd watch soybeans, meal, oil. Oh, one's got to go too. I didn't realize the game. It doesn't work that way. I'd watch copper make a run, and I go, oh, silver's going to make a run. Doesn't work that way. Buy the one that you think you like, got it? Or sell the one you think you like, if you're bearish. Higher high, lower low. You're caught in the trading bands, period. That's how I'm reading that right now, void of a trend. Copper held beautifully the 200-day in gray, the green, the 100-day average of closes, and it's back over the 18. Until these numbers are taken out, I think the copper is really working to put in a trade bottom. I think partly behind that is the fact with China losing the American business. Remember, they'd export to us $450 billion. And by the way, that's our trade deficit with them, $454 billion. Just please understand this. And if you look at that, how do you make that up with other people? Well, you got to produce a lot of goods for somebody else. You can't do that. All right? You're not going to lose your biggest client and suddenly you think you got another one. There's nobody like us. It'd be one thing if you're in business, you go, I lost him, but boy, I got a guy in equal size. Who's equal to us? What two countries are equal to us? I can go on and on. So that's a real problem for them. So they have to turn inward. And to do it, they've got to get their housing market, they've got to do infrastructure, they've got to do all those type of things. They've got to throw a lot of money at their economy. They're going to have to let the yuan fall, maybe to 8. It sounds pretty crazy, but it wouldn't surprise me. The reserve bank ratio, they're going to come down. They're in trouble, and they have to do that. We're in trouble, by the way. So if you think, we got them, no, you don't. You got 5% you just hit in your 30-year bond. That's not good. You're back to 4.5% in your 10-year note. That's not good. All right, so this trade war, I understand the long-term goal, but getting there is painful. The medicine is very, very distasteful. All right, so as we look here, that's what I'm seeing in the market. By the way, platinum, this could have been a trade bottom low. You've done this before. Notice that? You make your spikes against that Bollinger Band. Unless you take this low out right away, I would not be surprised that you're back up right through here before you know what's going on. And look at the dollar. Here's the benefit of this chart. Name me a good that you sell in America abroad. Suddenly the dollar is 10% less. We suddenly look very affordable. Does that make sense? Very affordable. And our businesses, because of different parts, not the best thing that can go on. In other words, this war with China has set our businesses to be aggressive to stay in business. So your pricing is not only the dollar, but it's probably even more than that. We don't sell to China. I think we sold, what, 150 billion in goods, something like that. So it's crazy what it is, but we lost that market too. So we want business. That's the good part of all this. Will the dollar keep going down? I don't know. It's not great for world economies to believe in the dollar if that's it. The dollar will stay the reserve currency because there's nothing better out there, but it's been hurt and countries are getting away. They're buying the gold market, they're buying other things, and somebody's dumping 30-year bonds. It's not just the market. I believe somebody is dumping them. I'm Ira. What you want to do is learn how to work with all this. One of the things that I like people to do on markets like this is use pivot points. If you know what they are, they're really geared for the in and out trader during the day. They're not for position trading in any manner. But if a formula, if you have good charting software, it's in there. It's going to give you a pivot, and it's going to give you buy and sell numbers above and below the market. And it's meant to scalp with, back and forth in there. One of the things I learned how to do is tie my momentum studies to it to give me a better advantage. And to use this, let's assume I want traders to buy gold at a certain number. I always look at the pivot. Does that thing make sense? Oh, it does. Look at how they're tying together. Blah, blah. Is the momentum working against me? Maybe I should wait a little bit. So it's a 3-part video series. It's simple. You will learn it, and it's free. How do you get it? Go to iraepstein.com. That's iraepstein.com. It's in the free offer section. Got it? There's a link at the top here with it as well. I'm Ira. You have yourself a great weekend. I'll catch up with you all come Monday morning. Take care.